Welcome back. Now, the Government Employees Pension Fund is Africa's largest pension fund with over 1.2 million active users from more than 325 government departments. Over the past decade, the GEPF has increased its size from 1.4 trillion rand to 2.3 trillion rand through a combination of employee contributions and investment returns. As the investment landscape shifts, the fund's principal executive officer, Musa Mabesa, joined us to look into public asset management in uncertain times.
So the GEPF, as the largest retirement fund on the African continent, both by asset size, but I think also our membership numbers speak for themselves. We are a defined benefit fund, and that means the benefits that we promise to our members are guaranteed. That changes the landscape in terms of how we invest and investing for the long term. So we look more on the long term because of the promised retirement benefit promises that we make for our members and the pensioners. So that investment strategy allows us to take a long-term view in how we invest. So speaking of some of the challenges and the volatility in the market, we tend to overlook those on the short term because we're a long-term investor and looking at growing the fund, sustaining the fund, and sustaining the payment of benefits into the future. So it doesn't make the GEPF jittery in terms of what is currently taking place. Obviously, we do factor that into our planning and how we respond, but we would not have a knee-jerk reaction to the strategy of the fund or adjusting the strategy of the fund from an investment perspective in order to accommodate some of the volatility. So looking at a 10, 20-year horizon, the fund is able to make prudent investment decisions to ensure that we can sustain the payment of benefits.
All right, I hear you on that because that's the thing, right? Long-term investing is about really ignoring what is happening in the short term to make sure that you actually get good, sustainable returns. How have your returns shaped up? And particularly, even your long-term investments do also get affected by the short-term movements in the macroeconomy in the market. So how are your returns shaping up at this point? And as much as you do invest for the long term, are there any approaches that you are having to shift in terms of how you invest?
So we follow a liability-driven investing approach, which means we look at the complexion of our liabilities, and then the consultants, the bright people, then will tell us how the makeup of our investments should be. So the strategic asset allocation comes from a liability-driven investment approach. We then take that strategic asset allocation, which will tell us to invest in a wide range of asset classes, and the diversification of those investments is what shields us from some of the volatility in the market. So we can invest up to 20% of our assets in offshore investments, and that includes investments in the rest of the continent. And that, to a certain extent, gives us the buffer that we need to protect us from some of the volatility outside the South African market. I must hasten to say that the GEPF liabilities are rand-based. So the bias towards South Africa and investing in South Africa will always take priority for us so that we're able to meet our liabilities in rand terms, but also from our diversification strategy, we're able to use those returns that we'll get from our international or offshore portfolio to augment some of these movements in the market. So it's a balancing act, but also through the use of techniques that the investment consultants and our actuaries will also input in that process. So it's a balancing act, again, looking at the long term and then balancing how we invest through our various managers.
Well, looking at those benefits then of your investment approach and in terms of what then you are able to get in returns, there is an expectation for that to kind of filter through to pensioners and pension income. And I do note that earlier on this year, there was a disgruntlement coming from pensioners that the GEPF only granted a 2.9% increase in pension income. I understand that that was based on the November 2024 inflation figure, but could there be conversations to be had on adjustments to the calculation model, particularly as the fund is producing returns?
So again, I think we also need to look at the balance of forces within the fund and the makeup of our membership. So just over 550,000 of our over 1.8 million members is made up of pensioners, spouses of previous members or pensioners, as well as their beneficiaries. Now, the balance, which you alluded to earlier, of over 1.2 million, is made up of active members. Now, the fund invests all its investments as one pool. So the strategic asset allocation I mentioned, we've got one strategy that applies for the entire fund. We don't have a separate fund for pensioners, but it's one fund pulled together with the savings of active members as they contribute on a monthly basis. So the fund has policies, and it's also governed by the Government Employees Pension Law, and the rules specify that the GEPF should pay a minimum of 75% of the year-on-year inflation number as at November of the previous year for the increase that is due on 1 April of the following year. So those rules were carefully thought out by the actuaries and the advisors to the fund at the time the law was drafted. The board has, over the last 10, even 11 years, endeavored to pay 100% of the inflation number, the year-on-year inflation number. It's unfortunate that the inflation number was 2.9% as at November, and the board made an effort to pay 100% of that and not 75% of that as a minimum in terms of our rules and regulations. The 2.9% is the inflation experience as at November. So the GEPF did not work around any numbers. That's the inflation experience. What we've also done to test whether that is actually the year-on-year inflation numbers, since December last year, we've been tracking what the year-on-year inflation number is, and it's still below the 2.9%, which tells you that's a realistic number. Yes, in reality, that looks like a number that is small, but in line with the benchmarks or the parameters that we use for granting pension increases, that was 100% of the inflation number at the time. We factor in, and based on advice from our actuaries and other consultants, the sustainability of the fund. And back to my statement, the fund has endeavored to pay 100% of the year-on-year inflation number over the last 11 years, barring 1 year where we paid less than 100% but above the 75%. The board did make up for it in the following year when it was affordable to do so. And I emphasize on affordability because, again, we need to balance the interest of payouts today but sustaining those payments into the future. Back to the question you asked around the fund and the health of the fund. The fund is 119% funded as we speak, as of our 2024 statutory actuarial valuation. That tells you for every 1 rand that we hold in liabilities for our members, we have 1 rand 90 cents to cover that. We use those reserves and the excess to cater for these increases, as well as ensuring that the fund can sustain itself into the future. So it's again balancing the needs of all our members and pensioners together with the sustainability of the fund and what is happening in the markets to ensure that the fund remains sound and healthy.
And I mean, Musa, really, in reality, the real driver of that disgruntlement was due to the high cost of living that we are experiencing in the country. And related to that, I want to ask then, what experience has the GEPF had in terms of two-pot, under the two-pot withdrawal system?
So, the two-pot withdrawal system that came about last September, the GEPF was one of the administrators who were able to meet the demands of its members at the time. And we were grateful to our administrator that was able to start on the 2nd of September with the processing of these two-pot retirement withdrawals. What has been our experience? I think on average we have processed over 600,000 applications since September, and we've been able to make those payments within the 60-day period. What the GEPF did was, in terms of the law, benefit payments should be paid within 60 days of receiving a completed exit form. We have managed to pay the bulk of those two-pot withdrawals within the 60-day period, and the numbers have been rather huge, but that is the entitlement in terms of the law. It has not had an impact on the GEPF, save for us having to rejig our cash flows and managing our cash flows for anticipating these withdrawals, but the fund has been able to meet those requirements. At the end of the day, members are withdrawing from their own savings, so it doesn't have an impact on the funding of the fund, because then there's an adjustment to a member's benefits going forward once they've withdrawn a portion of their savings.
Of course, I want you to also take us into your confidence in terms of the dynamics that you are seeing in some of the retirement age norms that you are seeing, of course, as some people take early registration because of resignation because of the high cost of living. I remember that there had been some rumors earlier on in the year that there could be a change in the retirement age, but that was just a rumor. Are there any notable shifts, though, that you are seeing in terms of those retirement age dynamics and how they filter through to the impact on the GEPF?
We've seen, and either through benchmarks as well as attending international dialogues in the retirement fund space, we're seeing a shift towards a retirement age that is well beyond the 65 years maximum that we have in South Africa and our fund allows for. But in terms of legislation, we have not in South Africa progressed to the point where that age has been adjusted. Yeah. What we've also seen, though, globally as well, is how funds are shifting away from defined benefit schemes like ourselves and now employing either a defined contribution or a hybrid of this kind of arrangement where it's almost a pay-as-you-go scheme, so that it protects the employers who guarantee, in a scheme like ours, would guarantee benefits for life. But as I've indicated with the GEPF, the fund remains healthy. We make prudent investment decisions and look out for our members and pensioners into the future in a long-dated arrangement. So for the GEPF, that's not a conversation we're having. We are watching the trends in terms of what's happening globally with the move of the retirement age upwards. If that were to happen, obviously we'll need to look at the numbers. The employers would also need to come in to understand the extent of their commitment and any potential liabilities if that were to happen. But the fund, based on our operating model and the rules that govern the fund, any shift would not necessarily impact the fund, because we'll continue to receive contributions and manage those into the future for the security of our members and pensioners.
Musa, are there any other notable regulatory shifts that are impacting the pension fund industry at the moment, and maybe you can even extend that to investment landscape?
So the investment landscape in South Africa under the Pension Funds Act, there's Regulation 28, which regulates the limit of where investments can be made, in which asset classes and the limits. And I think over the last couple of years, the biggest focus has been on offshore limits, where retirement funds under the Pension Funds Act, under Regulation 28, can invest up to 45% offshore. For the GEPF, I think I may have mentioned earlier, we are governed by a different set of legislation, which is the Government Employees Pension Law, and therefore we're not subject of Regulation 28. We do borrow to the extent that we feel necessary from Regulation 28, but we are not subject to Regulation 28. I'll circle back to my initial comment that our liabilities are rent-based. So it would not suit the GEPF to have up to 45% of its investments outside the borders of South Africa. But we're also mindful of the impact of such a move, if it were to apply to GEPF, on the local economy. We account for a huge proportion of the GDP of South Africa. Yeah. So you can imagine if we were to move 45% of our 2.3 trillion rand offshore, that would have a significant impact on the South African market. So we're mindful of what it means for SA Inc., but also being mindful of our liabilities being rands-based and our ability to service those liabilities in rands.
And just lastly, as we wrap up the conversation, Musa, of course, we have to look at the impact of technology on different sectors. And of course, considering the fact that you have such a wide pool of members that you serve, we do see the threat of cyber cyber attacks across the public and the private sector, systems compromised by cyber attacks. What level of attention is being given to tightening the muscle to IT systems?
So, like all other retirement funds or governance structures, we have an audit risk, finance and risk committee that is also charged with ICT governance. And there's a huge focus from this committee and through the management team that I head to look into managing this exposure. We operate on a largely outsourced model. So we've got an administrator, the Government Pensions Administration Agency, and they have a huge ICT team. As you may be aware, they suffered an attack last year, at the beginning of last year, which was a wake-up call for us and many in the industry, where you think you've got robust systems to protect your systems from such attacks. And then when people do attempt to compromise your systems, you then have a new learning from that experience. And then we look to bolster our systems going forward. As I'm aware, you cannot be 100% safe from these attempts, but you work towards improving your security posture, ICT security posture, and do as many tests as possible to ensure that whenever an attack is aimed at yourselves, you're able to protect yourselves. So we are improving our compliance, especially with the relevant legislation, which is the POPIA, Protection of Information Act. We ensure that our members' information is protected, and to the extent that it may be compromised, we follow the necessary prescripts of the legislation to inform our members and also guide them on how to protect their information. But information security is a very important feature of the GEPF and its governance structures, and we continue to monitor it, and we are spending money to ensure that we protect our system and the integrity of our system and data at the GEPF.
That was Musa Mabesa, Principal Executive Officer of the Government Employees Pension Fund.